Now the forecast for this week. And yesterday, 10th of October, they made the slide during that of the Japanese session, and then rise from up, and again made the slide during that of the US session. And again today, during the start, they made this drop in the case of Euro and GBP. Nominally, you can see that GBP has dropped about 40 pips, the Euro has dipped about 1 or 2 pips. And then again, nominally, in the case of USD yen and also CHF. As far as the commodity pairs are concerned, Aussie has made a drop of 54 pips, but in the case of Canadian dollar, it has gained only 13 pips. USD CAD has gained only 13 pips. So they are making variable moves against US dollar. So even though they are showing US dollar gaining move to start with, but of varied degree, they are trying to do it. And then today they are expected to firm up towards or rise towards the close of the Japanese session, and then firm up during that of the European session and make another slide during that of the US session, or a sideways move. Then again on Wednesday they are expected to make the swing and slide during that of the Japanese session. So it will be more of a lower level consolidation, and then swing and rise during that of the European session, and then firm up further during the US session. Then on 13th, they will make the dip and the rise, swing and slide, and then swing and rise. So on Thursday, they will start gaining the level from that of the US session, and then Friday, they will continue to gain the level. So this way, they are expected to gain the level slowly after accumulating buy positions. Then afterwards, next week, we'll come across the monthly trending time, and then the market will all show the contrarian move. The USD weakening move will be done by that of the denominator, and USD gaining move done by that of the numerator. So, USD weakening move by that of the numerator, and USD gaining move by that of the denominator, like USD yen, USD CHF, and USD CAD. So that sort of moves they are expected to make during this week and the next week. So keep in mind that till Wednesday they are expected to make the swing and slide, and make gaining of 100 pips and drop again, gaining of 100 pips, drop again. That sort of moves they are going to do it, so that they will accumulate more of the buy position, giving the feel to the trader that once it gains, you have to sell so that you will be able to book nicely the profit. Once they do 2 times, then the traders commit 3rd time after the rise the sell position. Then the players continue to gain and trap them. So ultimately, you have to read the intentions of the players and then try to take the positions so that you'll be able to really book nice profit. And also keep in mind the trading strategy is very, very vital during such big volatile moves, especially month beginning and the month end time. Many of the traders get struck during that of the month end and the month beginning time because of the big moves they do it. And the players are here to earn as much as possible from the market during the month end, and also during the month beginning time. They make some extreme moves and induce the traders to commit wrong positions. So when GBP made the drop to 1.20 last week, and then immediately the traders are forced to close any level sell positions, even the any level buy position at the bottom, especially in the derived market. So that is how they make such extreme moves. So in the derived market, derivative market, you find the futures and the options. The margin call will come to that of the traders, and also for that of the exporters and the importers. When the forward cover requires more margin to hold the position, then the traders will be forced to close the positions by that of the banks, and that way they make huge profit from them. So initially in the banks you come across, the traders are all given that impression that if you go in for a forward cover, your equity loss will be protected. You will profit will be protected irrespective of the currency fluctuations. But subsequently, when the market goes against them, then they have to cut loss. And so what they are supposed to earn money, they lose instead. So that is a way, and the financial market, the structuring of the instruments are done. Thereby, when the traders are not smart enough, or even the exporters and the importers are not smart enough in understanding the market moves, then they tend to lose heavily the money. So here, in the name of protection, they make it as a trap. So you have to understand how structuring of the financial products are done. Then only you will be able to understand how the trapping is being done in the market as well as in the banking sector. Because if you want to earn using money, you have to be cunning. So you have to talk as if you are a so close friend, but actually you have to stab at the back. And that is the way they try to make money from the traders, the financial institutions, and also the players.